Multifamily Mike, as Mark referred to me, is a moniker by which I'd love for you all to refer to me someday. And we're working actually quite extensively in the multifamily market, Mark and I, primarily in identifying off-market acquisitions that we're working with sellers and bringing in principally affordable developers. That's some of our experience more recently. So Mark and I actually owned and sold a parcel to a Keneke development, and they just recently completed Hale Makana o Mo'iliili, 105 affordable senior units over in Mo'iliili. So we're very proud of that. The multifamily market is as stable as we could hope. How we track multifamily units, 4 units and above, $1 million or more, greater. We're all islands, and we source information from CoStar, MLS, HIS, talking with brokers, buyers, sellers, Colliers, internal brokers, etc. So it's pretty extensive, the research process we go through on a monthly basis. One of the surprises we noted is the actual increase in deals year to date that have occurred throughout this year. So we're up 13.2% over 2022 in the number of transactions. So again, we're looking, when you read the headlines, you would think that markets are down, but in this case, we're not seeing that. Now, you can also look at the perspective of total dollar volume in Hawaii, and it's actually down 37% when you look at all transactions. That is $1 million and above. So why is that? And this chart here, this shows all the transactions going back to 2016. So even though we have had that decline, we're still very solidly in the historic trends. Really, it's mega transactions. So only one mega transaction has occurred this year, and that was the deal Stanford Cars downtown project, the Mauna Kea Street Tower, Mauna Kea Tower, $130 million, I believe that was, and that was done with light tech funds. So that was a little unique. Historically, we've looked at using light tech funds for development. This was an acquisition. A couple of other deals that we were thinking may transact this year. One was Blackstone. They tested the market with the Kapolei lofts. We had clients looking at it at about a 5.5 cap rate. That didn't transact, as we understand it. That's no longer being marketed, but we were hoping that might transact this year. And that's about 150 basis point increase over a couple of years ago, where we saw transactions in that, institutional transactions in that 4% cap rate range. So a little evidence of things that have shifted a little bit. And then Sunset Terrace in West Maui is currently being marketed, and that's priced at, from what we understand, in that $90 million range, 5.5 cap rate as well. We'll see how that transacts, or if it transacts. We did, in speaking with some prospective buyers, there were some current concerns about potential rent moratoriums due to the fires. So there are some questionable things that maybe paused some interest in that asset. But overall, again, the transaction total volume is down because of the absence of mega deals. Some of the more notable transactions, again, Mauna Kea Tower, that was $130 million, 94-289 Leonui Street, 11.9. These are really reflective of what we're seeing in the marketplace. Low leverage deals or no leverage deals. So a lot of cash buyers. So that's why you're not seeing a lot of discounting in pricing, and as you'll see even in cap rates too. So this deal, 60 units, Steve Heimler acquired that. And he is, if you know Steve, he's a buyer that can go in, and there was a lot of value, heavy lift on this asset that he was able to do for a longer term hold, and 53.9% loan to cost. And then 1528 Emerson Street, Carlton Kusunoki, thank you for joining us today. He is a cornerstone to the multifamily market. Nobody's done better in this space of acquisitions and repositioning and selling assets. So the bulk of the multifamily market is the $1 to $10 million range. 95.3% of the transactions occur in that space of the multifamily transactions. And it's just had a very modest decline at 2.4%. So we really look at that as a very healthy market on the multifamily side. Average unit price is nominally down 308 to 289. And this is across, in this case, 79 transactions we were tracking. So there's a lot of data that comes into those average price per unit. And cap rates are still low. So we have the most data in this cap rate, or in multifamily cap rate. So we have 23 cap rate reported. So we feel it's a good litmus test. Again, you're not seeing a radical rise in cap rates because low leverage or no leverage, and or value add capabilities. So why? We talked about the leverage, value add deals. So the ability to go in and raise rents, increase, improve the product, and create value that way, and low leverage or no leverage. Who's lending? This is interesting, and this is, I don't think by no means all inclusive. This is information I got from, pulled out of CoStar, excuse me. So side-by-side comparison 2022 to 2023, the outside of the institutional acquisitions that topped the total dollars spent. Interesting look, in 2022, you'd see who you would expect: Bank of Hawaii, American Savings Bank, FHB, Hawaii State Federal Credit Union, on down CPB, Hawaii USA Federal Credit Union. On the right-hand side, 2023, you can see those numbers are reduced. Having conversations, most of the lenders I spoke with certainly either didn't know or couldn't share exactly how far down their lending is this year. But I heard the word precipitous in the multifamily space. But precipitous was one word, and haven't done a deal all year, something else, by a lender that typically does it. So I'm sure, Guy, Kavika, if you have more insight to that, be welcome. Or anything contrary to that, let me know. But it's interesting to see how much cash is just being used for these acquisitions. So switching gears a little bit to the development side of things. And this slide, let's see. Again, looking at public funds or different financing vehicles to fund development. Obviously, LIHTC, RHRF, HMMF funds, different funds that are being used to fund development. You can see the historic numbers from 2019 through 2024 forecasted, how many units will be delivered. And these are all affordable housing in various ranges of affordability. And then HHFDC calendar year, here are the allocations that were involved with development last year. So 700 million almost in funds that were allocated towards affordable housing development. And from what I understand, that's going to be consistent through 2023, but they've yet to report on that. So, as I think we all know, to develop market rate housing or market rate multifamily housing, they've had maybe 3 projects done in the last 30 or 40 years. So it really has to be done with public funds of some sort. And the thing we're trying to identify and work with, I actually invited our colleague from Colliers Mortgage. It's a new line of business that Colliers is put together, or through acquisition of a company a year. How long?
So middle of, call it July, June 2020, Colliers International ended up buying out Doherty Financial Services from the Minneapolis office. Doherty had been around since the 70s. They were an investment bank that picked up some agency lending. They did their own municipal bonds and participation programs. And by that time, the head was kind of ready to write off into the sunset, so to speak. And it was a great opportunity for Colliers International to finally have a lending arm on the agency side. Primarily, we focus on HUD, Fannie Mae. We still do the municipal bond side, and and then we're also very active in the USDA space, which isn't really something that most people focus on because that's mainly primarily attacking high-cost rural marketplaces that have populations like sub 50,000. So you're trying to attack these markets that normally most people wouldn't have an appetite for because they're going, well, you don't have a population to support these kind of development goals. So we can use the USDA grants and loan systems to fill those voids. So
yeah, so it's basically a new line of business for Colliers, relatively new, that we want to make sure everybody was aware of. And Jordy De Hoyos, he lives on the Big Island. So I actually talked to him this morning and said, hey, we're having an event this afternoon. It might be good for you to come by.
Give you a 4-hour notice.
And he'll do the same for you. In particular, so we're really, as you know, Chris Flaherty here in the audience, and maybe you all know, it's the LIHTC funds. They're competitive. It's competitive to get the funds and the allocation. So really trying to identify the missing middle is something we're trying to do on a daily basis, and trying to find solutions for our buyers. As I mentioned, we identified some acquisitions, and we're trying to help developers get the funds. So USDA, a couple of USDA options, unrated muni bonds or recycling muni bonds. Again, these are all acronyms that Jordy can fill you in if you're really curious. Better than me.
I'll take you down in about 5 minutes.
But the rubber meeting the road is they've done 2 deals over on the Big Island recently. One is a 104 unit deal where they sourced, it was a $52.6 million development. You sourced $23.3 million in that, I believe.
Yeah, the Walleye Road and Hilo's side, since Hilo has a population of over 50,000, you know, like right on the line, you can't really use USDA out there. So that was primarily sourced with the revolving housing fund. The remainder from there, you know, they had some, you know, the land was already included, so we came in with the HUD loan, and you know, they were able to take it down. The good thing about HUD, you get the 40-year AM on that, on the ground up side for D4, and a 115 cover, which, you know, creates a lot of room when you're trying to focus on building out that stack without having to go, you know, hard seconds or any type of equity structure that, you know, they're going to be in a double-digit space. And then if you look at the Kona side, that was a LIHTC deal that we were able to, you know, hit with about, you know, close to $20 million on that side. And then we came in with a USDA loan that was able to cover the gap. And the good thing when you have those components involved is, I mean, compared to most other lending spaces out there, you're able to get a pretty good rate, still get the 40-year AM. And so again, it makes up some space that normally would be reserved for having to, you know, wheel and deal on the equity side. So it's definitely helpful.
Yeah. So again, he's a good guy to talk to on that. So thank you for joining us, Jordy, on Last Minute. And I'm stealing my dad's line. He said, I have a great memory, it's just really short. So I invite you all to take a look. We have a lot of the stats that we presented tonight and charts, and with Mike Hamasu's help and some of my background in databases, Mark and I, for our team, have created a database that's accessible, or at least a chart, teaser chart on our website, thebrattonteam.com. So I invite you all to take a look at that and certainly ask us. And we have on our phones at the ready average price per foot, trends, anything like that. So he's got a really good memory, so he can remember this stuff. I had to default and create a whole database to do it, but we do pride ourselves on really being knowledgeable about the market and welcome you to ask questions as the years go on and comparisons, and hope it's helpful. Because again, as Mark started, as this began, we went into it with one whole thesis thinking the market was not that great, but when you really look at the numbers and the facts, Hawaii is very robust. So with that, yeah, thank you.